All right, welcome back, real estate investors. Here we are. I'm joined here with Mike Taylor, broker, owner of Red Door Property Management. Mike, how are you today?
Excellent, Chris. How are you doing?
I'm doing really good. And as you know, my name is Chris Knight, business development manager here with Red Door Property Management. And whether you consider yourself a reluctant landlord or an active investor, we are about to dive into some market data that you absolutely want to be in tune with. And as you know, we continue to expand the information and the data that we're bringing you so that you continue to be extremely well informed so that your properties are going to outperform your neighbor investor down the street. So today we're going to expand it a little bit. We're getting into a little bit of sales data here, a little service level sales data, and then we will jump into some surface level and even some detailed economic data that's happening around the Indianapolis area. And then, of course, we are going to dive into the market report. So stay tuned, pay attention. This is information you absolutely have to be in tune to. And then, of course, you're going to want to stay in tune as we get into 2025 and start to mix things up even a bit more. So without further ado, I'm ready to jump into this. Mike, are you ready to dive in?
Man, I'm so excited. We just keep adding new stuff to this and make it better and better. We got economic data. Now we're going to do some sales data. I love this. I love it. I love geeking out on real estate.
Yeah, I know. Yeah. So I'm always giving the sales guys a little bit of a hard time because property management is just better, of course. But here we are. We're going to relay some of this sales information because we realize how important this is to your active investor, especially with all of the headlines that are being thrown around out there. What's going on with mortgage rates?
Yep.
What's the median sales price? Am I getting a good deal? Things like that. And as you can see, we already have the sales data posted right here for you to see. So we're going to jump into this. I'm just going to highlight some of this, excuse some of the stumbles as this is our first go at this. So here we go. Your median sales price here in the Indianapolis area, and this, of course, is going to cover October data. So October 2024, as this is the most recent data that's been released by MIBOR, which is the multiple listing service here in the Indianapolis metro area. So 300,000 being your median sales price happening in October of 2024 with this, which is completely stagnant month over month. There's literally a 0.0% change month over month. The year-to-date sales, so we have 25,000 homes that were sold in 2024 so far this year. And currently active on the market, we have just over 5,000 homes currently on the market. Now, here's the number that I absolutely love to look at, whether you're talking about sales data or whether you're talking about rental data. It's what's the average days on market. And right now we're looking at 20 average days on market, which is up 17.6% month over month. And Mike, I'm going to have you dive in here a little bit because I always want to understand this number is as much as I possibly can. So 20 days up 17.6%. 20 days seems like it's really low to me, but I know during the hot market that we recently experienced not all that long ago, homes were selling within 24 hours, within 72 hours. But 20 days on the market up 17.6%. What is this telling us about the sales market here in Indianapolis?
Well, it tells me that we might be at a little bit of an inflection point with the sales market. This is a little bit old data, so this is October. MIBOR is obviously not as on it as we are here at Red Door. We got November data already. We're a month ahead. I mean, come on. No, but this tells me that this is we're probably at a bit of an inflection point. If you read the news articles, the recent ones, it's like, hey, inventory is up, sales are up, but also inventory is up. So I think what we're going to see, like you said before it was crazy. It was absolutely crazy. Things were selling like this. And things are still selling quickly if they're priced right and if they're in good condition. But we are seeing anecdotally, and we just had this conversation, Chris, that you're seeing we're getting some people coming to us as an option to rent their home instead of selling it because they can't sell it. So we are seeing that. We are seeing an increase in inventory. You can see the increase in inventory over there on the right for the next number. So I think that's what we're seeing is maybe a bit of an inflection point to get to more of a balanced market instead of it just being this one-sided seller's market. I don't think we're going to flip-flop and go to a total buyer's market, but I think we're going to see a bit of a balanced market this year.
Yeah, I absolutely agree. Exactly. You stole kind of my thunder there. I shouldn't have even mentioned that prior to starting the recording here. But no, exactly. I'm so glad you did because that's exactly what I'm feeling with while I'm on the ground here. So it is it is absolutely the conversations that I'm having right now is with a lot of people that are not able to sell their property, so they are turning towards leasing,
Yeah.
which is a great option for a lot of these owners. So I believe that we are, just as you indicated, on an inflection point that's going to indicate that we are entering a buyer's market rather than the seller's market that we've been in for such a long period of time. And
Yep.
even more so, and I'll come back to the month's inventory here, but I know the number that everyone wants to hear, investor or your normal consumer alike, is gonna be mortgage rates. So we're at a 6.79% as of, and again, this is going to be as of November 7th, 2024, a 6.79% mortgage rate. Now, what I'd like to continue to report as we get into this month over month and into 2025 is whether this is increasing or decreasing month over month. And unfortunately, this report doesn't indicate that. But I don't see much of a change happening. Prediction. If I'm making a prediction, I don't see that rate honestly changing too much even as we get into 2025. I think that rate is going to be pretty stagnant. Maybe as we get into third and fourth quarter of 2025, we might see a bit of a decrease. But even as the Fed rate continues to play around with the idea of reducing by a quarter of a percentage, I don't know that it's going to have much of an effect on this mortgage rate. Do you?
I don't. I don't think I mean, who knows? But it doesn't sound like the Fed is going to make huge moves this year. And really, we haven't seen that have a direct correlation to mortgage rates anyway, because the mortgage rates are really more impacted by the 10-year note, which is a little bit longer term, which has a lot more factors in play, like the debt, things like that. So I don't think we're going to see this move substantially. Maybe a quarter point, maybe a half. I'm not sure, but I don't think it's going to be substantially different one way or the other.
No, no. What I do think will happen though, again, is as we enter what some would consider a buyer's market, is we'll see home prices decrease just slightly. So the ability to cash flow even at a 6.5 or 6.75% interest rate becomes more of a reality, I think.
Yeah, you're going to need to underwrite that at these rates for sure, for
Yeah.
sure.
Yeah.
Let me just point out a couple things. So one of the things that I like that we do on our report that is not on this report is the month over month, but also the year over year change.
Mm-hmm.
And so I think what this report, one being a month old and then not having the year over year data, is maybe a tad misleading, just because I think we are at this inflection point. So let me just, if you drill down into the details and go year over year, let me just read you a couple of these year over year number changes, right?
Yes, love
So
it.
median sales price is up 3.5%. Closed sales, the number of homes sold, is up 9%. Number of new listings is up 9%. Median days on the market up 38%. Average days on the market up 16%. Active inventory up 10%. So everything is up. We're seeing more of everything, more inventory, more sales. So it's not as stagnant as this slide leads you to believe.
I mean, although all the numbers that you just ran through indicates even further of the inflection point that we are going to see a buyer's market, except for with all those numbers increasing up, you also indicated that purchasing is up as well. So, I mean, that might be the only thing that might keep us at this point a little bit longer, but
Yeah.
all the other numbers to me say that we're quickly approaching a buyer's market.
Yeah. I don't know about a buyer's market, but I would call it a balanced market.
Okay, well, we'll argue about that offline.
I guess we'll see who's right.
All right. I mean, we'll talk about the month's inventory here. We're at a 2.0, and as Mike was educating me here just before we went live, that really anything between a 1.0 and a 3.0, or really a 1 to 2.0, would indicate the seller's market. So this is a month's inventory that's currently on the market. So if no other home was listed from this point going forward, what is currently on the market, it would take us 2 months to burn through that inventory. So that's what this number indicates. And again, I'm going to repeat this so it sticks in everybody's brain. Anything between a 1.0 and a 3.0 would be indicative of a seller's market. So we'll pay attention to that number as the months go on. You definitely want to stay tuned to this. Anything you want to mention as we wrap up all the seller's information, and we'll move on.
No, I'm going to just make a bold prediction that we're going to see that month's inventory increase this year steadily as we get into 2025. I think we're going to start to see that slowly creep up. We haven't followed this, so I don't know if they do a 2.0, 2.1. I don't know if they do it like that, but I think we're going to steadily see this increase over 2025.
That's what I was wondering too when I was saying anything between a 1.0 and a 3.0. I really wanted to say anything between a 1.0 and a 2.5, but we'll see. We'll see if they.
Yeah, it's not 1 to 2 months ish is a seller's market. 2 to 4 is kind of a balanced market, and then anything over 4 is a buyer's market. So I don't know. We'll see what happens.
All right. That's going to wrap up our sales information. So all of you real estate investors, stay tuned. We're about to get into economic data and then, of course, market reports. We're going to jump into some market data here for the Indianapolis area. And what we're going to do is I'm going to highlight some surface level information for the Indianapolis and metro area. And then I'm going to leave it up to Mike here, who's done a little bit more of a deeper dive into the submarkets and what's going on specifically in these markets that might have an impact on your real estate investment. So, Mike, if you're ready, I'm going to dive in.
Let's do it.
All right, here goes some boring numbers, but important numbers nonetheless. But here's what's happening in the Indianapolis area. Rising rental rates. As of November 2024, which is the month that we're currently reporting on, the median rent in the Indianapolis area has increased to $14.35 per month, which is up $86 from the previous year. This upward trend indicates a strong demand for your rental properties here in the Indianapolis and surrounding communities. The occupancy rates here in the Indianapolis area, as we all know, is great. And this is what drives investor activity to the Indianapolis area year after year after year. In the third quarter of 2024, more than half of Indianapolis submarkets reported occupancy rates above 94%. Now, I gotta admit, this number even shocked me. But with some areas exceeding over 98% occupancy rates, and that's amazing. That speaks to incredible tenant retention, which obviously reflects a robust rental market with limited vacancies. So, and that's gonna speak a lot to my next point here, which is the population growth that's happening around the Indianapolis area. So the Indianapolis metropolitan area continues to experience population growth, which supports sustained demand for rental housing. But I know that you're already in tune with that. The economic resilience that's happening here in the Indianapolis area. So despite national economic fluctuations that everyone's talking about on your local media channels, Indianapolis maintains a diverse economic base, contributing to a stable job market and consistent demand for rental properties here in the Indianapolis area. Now, last but not least is the affordability advantage, which again is what drives investors from the East Coast to the West Coast to invest here in the Midwest, the affordability advantage. Indianapolis offers rental rates approximately 29% lower than national median, attracting renters seeking cost-effective housing options and ensuring a steady tenant pool for investor. 29% lower than your national average. So if you're looking for an affordability place to live, when everyone's talking about inflation everywhere else, the Midwest is exactly where you're looking at affordable housing. Mike, your turn.
Yeah, no, I love it. I will say, I do want to just put a plug in for our own market reports, because those stats are good, but I think what we do is awesome. We slice and dice the data so much more and get so much more granular. So stay tuned for our market reports. Those are coming up next. You can click on a link to get to them, but we do all Indianapolis by itself. We do the submarkets, and it's really interesting to see that data changes quite a bit when you look at the different markets as taken apart from one another versus just kind of the Indianapolis metro as a whole. So anyway, I just wanted to mention that those are coming up. Let me just jump in with a couple of news articles that are recent that either highlight an area or just kind of like see what's coming down the pipeline. So anyway, let me just jump into it. I'm going to kind of go fast and furious here, if you're okay with that, Chris. Just going to maybe just read the headline, maybe a sentence or two. We could chat about it, but I just want to get the news out there so everybody knows what's going on with the kind of the central Indiana market.
Yeah, it's exactly what this is designed to do. Highlight some of the boring stuff, but how is it going to impact my investment here in the Indianapolis area? Yeah, rattle away.
Cool. Coming off of the heels of our other video that we just did on the sales data, I got two here. So Central Indiana existing home sales surge 9%, inventories grow. So closed existing homes in the 16 county area rose 9% on a year-over-year basis, up from 23 homes in October of 23 to 2535 homes in October of 2024. Sales have now risen in 4 of the past 7 months on a year-over-year basis, following a 26-month streak of declining sales. So we saw this where there was lack of sales because there was such a lack of inventory. We're starting to see inventory hit the market, and then therefore sales hitting the market. So I think we're going to see a little bit of a more balanced market this year.
Absolutely. Yes. Yeah. You say more of a balanced market. When you say balanced market, are you speaking more to the sales side or more to the
Sorry,
rental
yes,
side?
to the sales side. Sorry, it was.
Okay.
Yeah, thanks for clarifying. Yes, to
No,
the
I
sales
just wanted to make sure. Yeah, I mean, if you're ever wondering if I know what I'm talking about, just look at this peppering that's happening here. I mean, this is a
side.
guy who knows what's going on. All right.
I got some similar stuff going on here.
No, yeah. So to the sales side, I mean, and we're going to argue about this. I just know it, and I know the viewers are going to love it. But it's you say balance. I believe that we're headed towards more of a buyer's market. So I can't wait to see. So we'll see how long we stay in the balanced area.
Cool. Also on that, so that was existing homes. Kind of a similar story on new homes. Applications for new homes. New homes jumped 29% in
Wow.
Central Indiana. Central Indiana
Wow.
builders continue to see a surge in business. Builders filed 874 single-family permits in the 9-county area, which represents a 29% increase compared with the same month over 2023. So we're seeing the same thing on new home sales as well. So demand is definitely still out there.
That's
Um,
interesting.
Maybe I'm going to just dive into a couple submarkets that we talk about on these videos. I got two, and I'll just touch base on them real briefly because they are just like proposals. But I love the Westfield market, and I think it's a good long-term play. Last month in our market report, we had some shaky news, but this is to me just representative of it's a good long-term play. So there's two news articles here. So Westfield City Council hears a new $1.2 billion plan for a Grand Universe development. So this is it's just east of the Grand Sports Complex, a project that has been in the work for 12 years. It's a 66-acre thing. It's between 186th and 196th Street, and it would be four distinct districts for science, technology, engineering, and Earth-related installations involving rockets, rocket boosters, engines, and outer space. I mean, that
Wow.
is cool. That is a $1.6 billion. That is crazy.
Did I just hear Elon Musk is coming to town?
Right?
He might stop by. No. In all seriousness, I'm glad you're reporting on what's going on in Westfield, and I know that we have a ton of Westfield investors that are currently under the Red Door umbrella, and this is information that you have to be staying in touch with because there is so much inventory that is currently on the rental market in the Westfield area, and if you're already under our umbrella and you're receiving your market updates because you currently have a vacancy in the Westfield area, you're already completely in tune with what's going on because we've made it essential that our leasing team update you with the inventory and the price reductions that are necessary in order to place a tenant quicker or ahead of the competition, because that's absolutely what's necessary right now.
Yeah.
Unless you're okay or comfortable, which I don't know anyone who is, with having vacancy for the next 3 months, you've got to get ahead of it. Your ability to cash flow is probably not going to be there. But what Mike has just mentioned is don't panic. There's a lot that's happening in Westfield. Your appreciation play is huge. You're probably going to be squeezed a little bit here in the short term.
Yep.
The important thing is to stop the bleeding, make the rent reduction quick and early, because all of your competitors in that market are going to have to do the exact same thing if they want to place a tenant. It just is going to take them longer because they're not in tune with the information that we're putting out here right now. So make the reduction now, stop the bleeding, and ride this out. I mean, things could change even as early as spring or summer, in my opinion. But the inventory is high in the Westfield area. So to wrap that up, don't panic. Things are happening. Westfield is a great area to be a part of if you're already in the market.
It seemed a little bit of doom and gloom to me, Chris.
Well, I mean,
lots of talk about bleeding.
It's the tough conversations that you have to be willing to have. Whether this isn't all. We're not doing this to just portray all rosy information. This is to keep you completely informed. And sometimes, believe it or not all that information is going to be great. But the point is that there's light at the end of the tunnel thanks to the economic Economic info
I was
that,
going to save the doom and gloom for the market report, but we'll just get it out of the way now.
all right, please continue. It's your show here. Let's go.
All right. Well, we got the grand universe, but to your point, though, Chris, the next one I have is more inventory hitting the market in Westfield. This is actually just hot off the presses. This came out about an hour ago. Indianapolis developer CRG is proposing a new plan to complete a long discussed project along US 31, which includes 366 apartments, 60,000 square feet of medical office space, 12,000 square feet of retail space, and 447 parking spaces. So more inventory in terms of apartments, not necessarily a huge competitor for single family. I feel like that's a different clientele. But again, just goes to there's so much building, there's so much activity going on out there. That's really what I wanted to highlight with the Westfield. And to reinforce your point is Westfield is a long-term play. It is a 3 to 5 to 10 year buy. You're going to be safe. There's so much activity out there. There's so much development out there. That's what I wanted to highlight with those.
Yeah.
Kind of on that same note, Fishers pumps new life into the aging Allison Road corridor. And so if you guys are not from here, so Fishers has had a ton of development, but it's always been on the east side of Fishers, and the west side, kind of the older side of Fishers, has kind of been a little bit neglected. It's a little bit run down. You know, the strip malls are kind of old. Anyway, they are looking to change that. So the intersection of 96 and Allisonville looks a whole lot different. Do you ever been up there? You do that Michigan left thing. You know what I'm talking about?
Yes, I know exactly what you're talking about. I'm up there all the time. Yeah.
It's gone. Did you know that? They
No, I didn't know that. Apparently, I haven't been there recently.
I just avoid it because that whole thing is such a disaster. So I try to avoid it as much as I can. But that's gone. It's now a roundabout.
Wow.
Yeah. So they're totally dumping a ton of money into there. So the despised Michigan left, which annoyed motorists for more than a decade, is gone. It's now a 2-lane roundabout. Residents are moving into apartments for a $135 million River Place development.
Wow.
It's being developed on an 83-acre site for years, and then the city will soon be transforming 125 acres adjacent to the White River into Fishers White River Park. So they're really committed to developing or redeveloping that west side of Fishers, which has been neglected. Again, that might be an opportunity for an investor looking for an appreciation play, because the east side is where all the construction and all the new housing is going. But if you can get into the west side before this kind of gets redeveloped, I can definitely see an appreciation play there for an investor.
Yeah, that's great. And the one thing I think Fishers is lacking, because of all the development that's been happening in that area, is really good investment into the parks, right?
Yeah.
Because a lot of people that live in the Fishers area, I mean, the trend nationally is outdoors, right?
Yeah.
Outdoor activity, and that's the one thing that I think Fishers is a little bit lacking. It hasn't kept people out of the Fishers area, but I think development into their parks is going to bring even more people to that area. Now, one interesting thing here, and we can move on here because I know the idea here is to keep these short and sweet, is the multifamily. There seems to be so much money being poured into multifamily, not just in Fishers, but you also indicated there in Westfield.
Everywhere.
What kind of impact do you think that this is going to have on your single family residential homeowners? And the reason I want to bring this up is a lot of the conversations I'm having with active investors, I'm meeting them at their property, and so commonly they're comparing their property to a multifamily across the street. Well, that property across the street, they're getting $1,400 per unit. Why my single family, being single family, should be able to achieve $2,000 a month, right? It's not multifamily. Do you think that those two things relate to each other? And let me share my opinion first. I do think that they relate to each other only to a small degree. I think it's a different type of individual that's looking for your single family homes that's rather than that's going to be looking for a multifamily residence. What kind of interaction do you think that those two markets might have?
I think there's some overlap. I do think that there's people who are interested in multifamily and people who are not. I think it trends towards younger people.
Yeah.
But I think that there's not even in Indianapolis, just nationwide, there was kind of a mad rush for multifamily because there was so many articles about how, oh, we're so short on housing. And then, with the zero interest rates, everybody raced to put up these multifamilies. And, this is opening now. That had to start 3 to 5 years ago, when interest rates were zero. So, there's a lot of talk that, we still actually have some trouble ahead on the commercial real estate side because of interest rates resetting and all of that. So kind of a long-winded answer. I do think they are somewhat related, but I do think that a lot of people don't want to be in a multifamily home.
Yeah.
You know?
Yeah, I think so. I think so too. I'm going to ask this question. It may be a difficult question to answer. So if across the street they're renting for 1,400, and I've got a 3-bedroom, 2-bath, 1,600 square foot, 1,500 square foot across the street. I'm thinking that single family home might rent for 16. These numbers mean nothing, but this is just for fun. 1,600, maybe 1,650. If I'm running just off the one comp across the street. Again, These numbers mean nothing. Your thoughts? Just curious.
Again, I think at a certain point, it's going to make sense where financially you go, oh, well, hey, I'll live in a multifamily. I'll make that sacrifice. But again, I think there is a premium to be paid for multifamily for somebody who wants that. If there's somebody who wants the amenities of a new multifamily, they want the gym, they want the pool, all that kind of stuff that comes with it. That's just a different subset of renter.
So glad I asked. Okay, so you're indicating a premium for the multifamily because that individual is going to be pulled in that direction because of the amenities that are going to be provided by that multifamily.
Yeah.
Yeah.
Because of the yard, because it's just a little bit more family friendly, things like that. Yeah.
Okay. Yeah. Real estate investors, here we are about to dive into the market reports that are indicative of the market as of November 2024. I love this. I know everyone here that's watching, you guys love this market data. It helps you make informed decisions, whether you are a reluctant landlord or you consider yourself an active investor. You can catch all of this data, including the video content that we just shot, assuming that you're not watching the video in its entirety. We do cut these up. We just started releasing the sales data for the Indianapolis metro area. We started with that video. Be sure to check that out if you're an active investor in the area. That's information you're going to want to stay in tune with. And then we went into the economic data that's happening around the Indianapolis metro area, which you absolutely need to know what's going on. Where are you going to be putting your dollars? What kind of investments going on in that community so that you can make an informed decision before you pull the trigger. And now, even better, we're going to get into the market data. Now, this is going to be especially important if you find yourself being a reluctant landlord. Now, we kind of have adopted that title to be someone who possibly can't sell their property, which I'm getting a lot of phone calls from individuals who are not able to find buyers for their particular property right now. So they're turning to a great and reliable option of leasing their property out. So you're going to want to know what's going on in your specific area. How long can I expect my property to be on the market? At what average rental rate? And then, of course, you're going to want to pick up the phone, give me a call so that I can give you a more in-depth analysis on what's happening in your specific area and your specific property. And now here I'm joined with Mike Taylor, broker owner. Sorry for that long-winded opening here, Mike. It's great to see you, although I've seen you for the last hour and a half. It's great to see you again.
Great to see you again, Chris. It's been a long time, huh?
And of course, as everyone knows here, my name is Chris Knight. I'm the business development manager here with Red Door Property Management. And in case I didn't mention it before, because these were all of these videos are starting to bleed in together. If you haven't found this information yet, you can find it on all of our social media channels, Facebook, Instagram, TikTok. And of course, if you don't find yourself interested in anything social media, which I can understand, I'm on Facebook. I understand how that stuff gets hairy over there. You can always find this information right there on our website. We post it in several areas, so it's easy for you to find. But of course, if you just click that watch and learn tab, you're going to find all of this valuable information right there at your fingertips. You can click on this as well as some much other valuable content that we shoot, the interviews that we do. Anyway, all that information you're going to find there. Let's stop wasting people's time. Let's get into these market reports. I'm ready.
Let's do it. All right, let's start with Indianapolis. So I think, if we could sum this up, I think seasonality is probably the theme that we're going to see here this month. So we're shooting this in December, but we're looking back here 1 month, November of 2024. So we're kind of wrapping up the year here. And, if it's a normal year, whatever that means, we should see a little bit of a decrease in activity, which also couples typically with a decrease in price and usually an increase in average days on the market. So let's dive in and see if that's what we're seeing at each of our submarkets. So Here in Indianapolis, we've got 2,084 homes, which is actually really right on track with last year. So nothing crazy to report there. Average rent, 1450. And good news, bad news here. So good news is that's up 5.5% roughly from last year. So that's really, really encouraging to see. But then we're seeing the seasonality creep in where that's down, just a little over 2% from last month. So that is, I would say that would be really my expectation to see. You can see last year how, November dips down and then December dips down even more. That's very typical. Kind of glad to see, we're getting back to normal. I'm never glad to see the average rents go down, but this is kind of a normal phenomenon here in the Indianapolis area. Average days on the market, actually we're down from last year and down from last month. We're at 46, which is, it's okay. It's not fantastic, but for November, it's, not bad. So no alarm bells going off there. Kind of, I would say, average for a November time frame. Average sales price, I know I get tired of saying this every single year, or every single month, but 241, 305 is the average sales price for homes under 500,000. That is just so unbelievably affordable. If you're watching this from California or Texas or Florida or Colorado, I mean, you can't even believe that you can get a house for $240,000. It is unbelievable. So anyway, super, super affordable. And, going back to our other first video that we did, the economic data, I think if I remember, you said average rents are 19% below the national average. And that's reflected in the sales price here. And there's tons of those available. 790 of those homes sold last month for homes under $500,000 with the average sales price of $241. So it's just super, super affordable. No glaring news, good or bad this month for Indianapolis. Kind of, again, seasonality, adjusting to the seasonality. If you don't mind going to the next slide, Chris.
Not at all.
Yeah. Let's just take a look at the, to kind of give a little bit more perspective on the number of active homes and days on the market. Like, what does that mean? 2,084. Well, you can see here, we're really right on track with last year, trending almost exactly towards last year. So seasonality, we start to see a little bit more homes on the market because there's less people renting. So again, nothing major, good or bad to report there on active homes. Days on the market. I'm just excited to see this thing leveling out a little bit and being way down over last year. Looking back at the summer months, just super, super encouraging. But that 48, we're down just a little bit since October. But again, it's acceptable at 46 here for December. So that's pretty much it for Indianapolis. Not a ton to report. Again, just kind of plugging along.
Yeah, it is kind of plugging along. And if last year's any indication of what we're to expect this year, seasonality likely plays into what's going to happen in December, that you're going to see a little bit longer days on the market. Of course, unless you're staying in tune with what's going on. And then, of course, you can make adjustments early on so that you can hopefully beat what's considered average here in the Indianapolis area.
Yeah. I will say, will you go back to the other slide real quick?
Yeah, of course.
Chris? And just, again, I know we talk about this a lot, but just to highlight, to stay on top of what's going on in the market and what the trends are and what you can typically expect. If you look at last year, you see that December takes a dip in average rental price, and you're probably going to see that this year. So if you have a home that's vacant now or coming vacant in December, you want to get that. Like, it is a race to get somebody in there right now, because it's actually probably one of the worst times to have a vacant home is November, December. It's the lowest in terms of average rent. It is a race. You want to get somebody in there as fast as you possibly can. So be realistic about your rates, be realistic about your terms, and just do whatever you can to get a renter in there right now, right out the storm through the winter. And then you can think about next year of raising the rents or getting even better, getting on a better cycle, getting into that spring, summer cycle.
You're exactly right. So I'm going to do a little bit of a shameless plug here on how Red Door operates, because I find it as an opportunity to do so. Number one, you call this a little bit of a dip last year. I'm gonna call that more of a dive. Okay, that is a dive. But nonetheless, look, one of the things that separate us from the competition, or forget about the competition, it's one reason of value of working with a company like Red Door Property Management. And I plan on doing another short video and posting that out here over the next, hopefully next 30 days or so. But If you've inquired with us, you've probably already seen this video, but it's how Red Door does its vacancy market updates to our owners. And this absolutely helps you make those quick decisions because the data that we have happening when we're marketing your property. How many clicks has your property had? How many showings has your property have? And what decisions need to be made because of what that data indicates? That's data that we are going to relay to you on a weekly basis so that we make quick
Yeah.
decisions. Because just like Mike said, I mean, it's a race to put somebody in your property. So having that data can help you make those quick decisions. And that's exactly what we're here to do, so that we can place a tenant in your property quicker than the competition. Sorry, it was a little bit shameless here. It has nothing to do with the market reports, but there it is.
No, it's important, Chris. You got again. You have to have these data-driven decisions. It doesn't matter.
Exactly. Yes.
We're not afraid to say, "Hey, we had no showings this week. We had no inquiries this week." We just need to get that data to you, and so that you can make a decision that we need to probably lower the rent or do something different. Maybe it's a condition issue, but we have to do something. If we're not getting any leads, we're not going to get the home leased. So we give you the data and our suggestions based on that data as far as what to do.
Yeah, and last thing I'm going to say, and I'm moving on here because this is market reports. This is not for additional information. But if you find yourself in a position like that, you're marketing your own property, and you're wondering what you're doing wrong, give me a call. I'm happy to kind of go over what it is you're experiencing real quick and give you some advice. I have no problem doing that. You don't have to be a client of ours. I'm happy to share information with you. Give me a call because there's a lot more that goes into things that you can do or things that you think maybe you should be doing in order to place a tenant quicker. And chances are you're wrong. Here we go. All right, Fisher's market update. Since we've already wasted so much time going into information on the Indianapolis market report, which if you're just watching these individual market reports, go back and check. There's some good information on the Indianapolis market report. But Fisher's is all around. This is going to me, Westfield and Fisher's kind of play a little bit of the same game, I think. I mean, Fisher's is a great market to be in. I think there's going to continuously be an appreciation play here. If you didn't catch the market economic data that's happening in Fisher's, go back and check out the economic video because there's things happening in Fisher's that makes that even more likely that an appreciation play is happening because if you're purchasing in Fisher's right now, the cash flow potential is probably very minimal unless you can find an off-market deal. But here we go. Here's what the market activity looks like. Active homes is 119, which is pretty consistent month over month. Last month we had 112. Average rents in the area are changed literally 0% month over month. You're at 21.95. And your average days on market here in the Fisher's area is right at 50, which is down from 54 month over month. This number always surprises me because our Fisher's properties always seem to lease up a lot quicker. So I've always given Fisher some love just based on that fact alone. But it's hard to do so, as all of you know, as you've seen these market reports, because I'm constantly reading average days on market at somewhere near or around 50, which is not something a real estate investor is likely to love. So, but that's what the data shows. It is down 7% again from 54 month over month, but your average days are at 50. If you're trying to lease up your property all on your own, that's likely what you're experiencing. Average sales price for your investor point of view is at 367, which is up 0.75%, up nearly 9% year over year. So again, your appreciation play is absolutely living live here in the Fisher's area. And jumping over to the next slide, your active homes has been pretty consistent year over year. We're following that trend line religiously. It's shocking, honestly, how that active homes is just following last year's inventory. And your days on market also is flying very closely. I mean, and this speaks to why I really like Fisher's, because I've always had the sense that Fisher's is reliable, and this data kind of indicates that. It's reliable data, which tells me that as we get into December, we are very likely to see our days on market tick down just a little bit further. Anything you want to add on Fisher's?
I think Fishers is a solid market. I like it. Again, I would encourage you to go back to the economic data. There's some exciting stuff going on the west side of Fishers, which I think has been neglected. You can find some affordable-ish houses on that side, and to me, it's a traffic-wise, it's a way more desirable part of Fishers. You don't have to go up 69, right? You can go up Allisonville. So if they're pumping a lot of money into that section of Fishers, so I think there's an opportunity there on that side if you could be a little bit opportunistic. But Fishers is just so solid. It's just such a good market.
Yeah, yeah, yeah. There's a lot of entertainment in Fishers too.
Yeah.
I mean, a lot of things happening from Top Golf to several IKEA. My God,
Yep.
IKEA is amazing. What? Here we go. Noblesville. All right. Man, I'm gonna have to change the order of these because it's hard. It's hard going into Fishers, when I'm on this dole, and then it's like skyrocketing up to my feelings of Noblesville and the Greenwood area, which we're about to get into. But Noblesville first, active homes 117. Your average rents are ticking up month over month. Let's go Noblesville to 1945, and then your average days on market is at 34, which is up 25% year over year, up 13% month over month. But who cares? Average market is at 34. That's your amateur. That's your amateurs that are participating in that figure right there. That is leading to an average days on market at 34. If you're with a professional like us, you're beating that. That's amazing. That's incredible. Your average sales price at 351, which is down 2% month over month, which is only going to be great news if you find yourself as an active investor. Noblesville, you just like the stock market, you want to buy low and sell high. So let's hope that average sales price ticks down for your active investors so that we can get into this market, and then you can hold that until it goes sky high. Active homes, again, pretty consistent here. This is a market that is just north of the Fishers area, and it gets a little bit of that Fishers play too. But it's pretty consistent on your active inventory. Your days on market, which we've already mentioned here, is consistently awesome. I mean, I would have taken the days on market every single day this month, aside from March, which I don't believe March even is real. So there you go. Anything you want to say about Noblesville?
No, Noblesville. It's just it's a tried and true. It's a good market. I've actually got a couple homes in Noblesville. I never have any problems renting them out to speak to the days on the market. It's a sought after community, and it's just another solid community.
Great schools, which typically results in good quality tenants, lower vacancy, and best of all, which is something we probably don't talk about often enough, results in lower turnover costs.
Yep.
Westfield, take it on over.
Okay, Westfield kind of was the darling a little bit for the beginning of the year. We're starting to hit the brakes on Westfield a little bit.
We're on Westfield, not Fishers. That's a joke if you caught the Fishers market report. All right, sorry.
No, Westfield, we talked a lot about it, again, in the economic data. There is a lot of exciting stuff going on there, and that does play to the long-term value of Fishers. I am still bullish on the long-term in Fishers. The short term, it is going to be, cash flow is going to be very, very tight in the short term in Westfield. We're just seeing a lot of inventory hit the market. I mean, that's to me, this is the one takeaway number for this market report for Westfield is the number of active homes. And we'll see it on the next slide of what that means relatively. I mean, if you don't know 137, that doesn't mean anything, but I'll show you in the next slide what that means. But that is, to me, the takeaway is lots of inventory in the Westfield market, and it's affecting average rent. And you can see it. Look, we're down 4% year over year. We are down 3% roughly month over month, and average days on the market is 49, which is it's creeping up there for sure. That's actually down a little bit, but I would anticipate I wouldn't call it a race to the bottom, but if I had a vacancy in Westfield right now, I'm lowering my rent. I'm trying to get somebody in there ASAP. Because there's a lot of inventory on the market. There just is. There's a lot of new homes up there, which is great. There's a lot of activity up there, but there's also a lot of inventory up there. We've been talking about it a long time. maybe we're driving too many investors up there, but it's a reality that there's a lot of active homes on here. So if you're buying now in Fishers, you're definitely not buying for cash flow. You're buying for the 5 to 10 year appreciation play because there's a ton going on up there. Just listen to the economic data, but cash flow is no. If you bought your home 5 years ago, you're still loving it.
Mhm.
So if you're looking to purchase, average sales price 367, 170, down year over year, up just slightly month over month, and 67 of those homes sold last month. If you don't mind going to the next slide, we can tease out the active homes, and you can see there in the red, that is just like since July or August, that is just straight up and to the right, and that is not what you want to see in terms of active homes / inventory / competition. So it's not awesome news there in terms of active homes. And then days on the market, been a little bit of a wild ride here this year. It actually is trending down, which is actually a little bit shocking to me based on the inventory. You would think that it would go up, and we may see it go up in over the next month or two, but actually not that bad, all things considered. There at the 49 days on the market.
Yeah, I agree. So a couple things I'd like to add here, as I know a lot of our investors here with Red Door have several properties here in the Westfield area, and I want to serve them at the same time that we're relaying this information. And also, if you're looking at the Westfield market, or if you have a property that's closing in the Westfield market, as I know a lot of people do. So this is what we're experiencing here on the ground. Active homes, you see it happening right here in this graphic. 137 currently active homes in the Westfield area, and you see that sloping up, and I guarantee come December we're going to see that slope up even further. And the reason I know this is because of our owners currently having properties marketed, and because I'm in tune with what's happening in the Westfield market. I know what the competition level is like, and it is high. There are a lot of townhomes that are completing construction, and those homes are just now hitting the market. A lot of investor activity. So, what you need to be, speaking to Mike's point just a moment ago, you really need to be making these adjustments. It also indicative of what we were just mentioning in the previous market report of why it is so important to be in tune with the week by week data so that you can make informed decisions. But here it is. The competition is real in Westfield. You need to make the adjustment now. Stop the bleeding that's happening. Save yourself a few dollars. Put a butt in the seats. And hopefully you can put them in there for a 16 or 18 month lease and have turnover in the spring and summer going forward. But beside that, you're not, if you're going to list your property at what is considered current market value at $2,200 a month, I can tell you right now, your property is going to sit, because that is what every other investor in Westfield is listing their property for. They're listing it at 2,200. So they're all fighting, and there's I can't remember what we indicated last month, but we did a deep dive on this of what we were exactly seeing in the Westfield market for active competition. It's high. What you need to be marketing this property at is more like 2095, if not even 1995. I know that number sounds scary when you're averaging at 2200, but that's what's going to result in a quick application and a quick tenant being placed. So that's what you need to be looking at. And I feel like we're serving our owners a little bit with me relaying that information right here and now in this market report. And then the long-term play, there's a lot happening in Westfield. I would not be scared. I would not be rushing to sell my property. You're going to be just fine. But you're going to have some short-term pain for a long-term gain. I just wrote that right here and now.
Love it. Dang, it rhymed and everything.
I know. I can do things like that. You didn't know.
Hey, to that point though, I'm going to do a whole different video on this, but just for some real quick numbers. So 367 is your average sales price in in Westfield. If you see, it's called a 5% appreciation. That's relatively conservative. That is 361. I just messed up. 5% appreciation. That is, you're going to see $18,000 a year in appreciation. If you divide that by 12, that's $1,500 a month in appreciation. So if you have to take a haircut of $100 or $200 a month, you're still coming out ahead $1,300 a month. Now, that's not cash flow, of course. Yes, you're building that in the home over time, and you're not seeing that come into your bank account. Right. But like you said, short-term pain for long-term gain. The long-term is a plus $1,300 a month.
Exactly. You're not getting this information anywhere else. So if you haven't liked and subscribed on this market report alone, you're wasting your own time. You're wasting your own money. This is it. That is beautiful information. Well done. All right, that's it. That's a wrap on Westfield. Everyone's going to love this. Let's move it along. You ready to move?
Let's do it.
All right, here we go. Greenwood. All right. We've got to change the order of these. I don't like this at all. I mean, we talk about Westfield. All right. Greenwood, our Noblesville sister. I love Greenwood. I absolutely love it. Let's jump down there to average days on market, which is up, 46% month over month. Who cares? Who cares? 38 average days on the market for your amateur investor. But if you're with a reliable property management company, there's no doubt you're beating that. We're going in reverse here. So your average rents at 1691, which is down 2.5% month over month, up just over 4.25%, a little higher than that year over year. Active homes at 139. Average sales price, let's go. This is no surprise to me, and we're going to continue to see investment dollars finding their way to the Greenwood area. There's a lot of expansion happening there. In fact, maybe in next month's market report, I'll make it a point to actually speak to these markets that I'm so in love with, Greenwood, Noblesville, what's happening in those areas. But before we get there, we're looking at 18, almost 19% up on your average sales price for your investor point of view for anything that's selling under 500,000, which I would think is a good portion of what's in Greenwood, but it's almost 19% year over year and up over 7.5% month over month. That's amazing information. That's amazing data. If you're new to the market, you're looking at Indianapolis, which I know so many new investors are, you should be looking at Greenwood too. Active homes, just a little bit deeper look at some of those numbers that we just went over. So this is a year-long look at 146. So your inventory is trending up just barely. I mean, if it's anything like last year, we may see a small tick down for December. I'll be surprised if that happens. There's a lot of new construction, again, that's completing. There's been a tremendous amount of construction that's happening in all of these suburbs, but a lot of that new construction is now coming to completion, right? So a lot of those are going to start hitting the market. In fact, that's something we haven't even discussed yet as we're going through these market reports. I would predict that we're going to see inventories jump in a lot of these suburban areas because of that fact alone. A lot of these new constructions are going to be starting to come to completion. So I wouldn't be surprised if we see a little tick up as we get into December. Days on market over time. I mean, we've been clearly consistent since July. We may see a little seasonality uptick in December. But we'll wait and see what comes when we get there. Right now, we're seeing an average days on market at 38, which is a comfortable number to be a part of.
Yeah, Greenwood. It's just, again, it's tried and true. It's a good market. It's good schools. It's a solid market. I mean, it's
hidden gem. Yeah. Honestly, I think it's a hidden gem because you don't hear anybody talking about it. And when I talk to new investors, I'm like, you haven't even mentioned Greenwood.
Yeah, exactly.
All right, let's move this along. That's our Greenwood market report, an area you need to be looking at. All right, let's talk about Anderson. Now, this one gets a little bit dicey. All right, this is such an emerging market. I know active homes at 153. It's one of our highest one. It doesn't seem like
that's crazy to me. That is crazy to me. Maybe that's why we can't. I'm telling you, we alone are gonna move this average rent over $1,000 a month this year. I'm telling you, we are. We're gonna see it. Yes. We're predicting it right now. By next year, it's gonna be over $1,000 a month.
I love it. Yes, I think we are going to be a huge contributing factor to that average rents ticking up because it almost never changes. I mean, as you can see,
it's so shocking.
We're at $8.95 and 44 cents this month. Next month we're going to be at $8.95 and 85 cents. Anyway, your average rents are at $8.95. This is a market that is kind of just going to be fun for everyone to watch. I know that everyone's loving watching it right along with us. Now, where it gets a little bit dicey is when we get into the average days on market. Now, we pull this data from the local MLS, which is going to be MIBOR, which is becoming a lot less used vehicle for marketing your properties. So the available data there makes it very hard to display accurately what's happening in that market. As you can see here, it shows or indicates rather an average days on market in 82. That's just not completely accurate. And we're going to change this up as we get into 2025. We may even change some of the data that we're going to relay on a month-to-month basis. So if you haven't already, jump down into the comments, jump down into the chat. Let's hear what's happening. What kind of information are you interested in us portraying on a month-to-month basis? But regardless of all that, I wouldn't pay too much attention to the average days on market that's going to be indicative in this market report because it's not going to be truly indicative of what's actually happening on the ground. Active homes, though, at 153, there is a lot happening. And in fact, I'll try to remember as the months go on. We have one completely remodeled property that started from the ground up here at Red Door, where we identified all of the market readiness items and then saw it through all the way through completion of those market readiness items. And the place is beautiful. I can't wait to see what happens. I expect it to rent quickly. Will it? I don't know. Stay tuned to next month's market report, and I'll let you know. Anything you wanna spit out here on Anderson other than we're excited to continue to watch this?
Yeah, no, we just started watching this kind of this year and identified it as a really affordable option that's really, really close to Fishers and Noblesville. We think it's an emerging market just based a lot on the affordability. If you're a new investor, you're looking for a really affordable home, this is it. And you're going to get a lot closer to positive cash flow, especially if you're willing to take on maybe a rehab or a flip or
Yeah.
something like that. You can really make some positive cash flow, which is almost impossible to do like anywhere in the nation. So that's what is so exciting about Anderson is the cash flow play here. The days on the market, again, just to emphasize that, I really wouldn't put too much emphasis on that. Of those 153, I'm not sure how many are there, but it's a very limited subset of those 153 that we're pulling that data from, because just especially in Anderson, not a ton of people use MIBOR to list their homes there. So don't put a ton of weight into that 82.
Yeah, and if anything kind of speaks to a sneak peek of what's happening in Anderson, if you're like, well, none of the numbers are indicating anything that you're saying here. Well, yeah, they kind of do. Look at that average sales price. I mean, at 187, you're seeing a over 26% increase year over year, and almost just over 6.5% month over month. There's a
Yep.
reason that those prices are going up at such a high pace, and that's because interest levels are increasing in the Anderson area. So man, I can't wait till we see some of these other numbers really indicate what we're preaching here, that we do see Anderson becoming an emerging market or being an emerging market, because those numbers would say that that's exactly what's happening.
Yeah. I'd be interested to see. We should do this. We should do like a deep dive on Anderson and look at because Anderson has always been an affordable market, but I kind of have this hunch that it's going to start to trend upwards. I think there will still be that affordability, but I think people are going to be looking for a little bit of a nicer home because they have been typically smaller. There's a lot of duplexes in Anderson, a lot of multifamily stuff. So I would love to see like a break it down by price point in terms of the number of active homes. That would be really, really interesting. I think we should do that.
Yeah, I love that idea. Love that idea. All right, let's move it along. We are about to get into the West Side Roundup. Here we are. All right, guys, diving into the West Side Roundup, which the West Side is an area that you definitely want to be in tune to. The West Side is going to include markets like Avon, Brownsburg, Plainfield. These are great markets to be a part of, and you're about to see why. The fun thing is that Avon, Brownsburg, and Plainfield pretty much make up the entire west side of the Indianapolis metro area. So these markets being so comparable is awesome. It's kind of fun. So here we go. Active homes, 44 in Avon right now. Your average rents at 2015 a month, which is up over 11.5% year over year and up 1% month over month. The average days on market is at a lovely number, which is up 47%. Again, probably skewed a little bit if you watch the Anderson market report. This number can be skewed a little bit as it is pulled from the local MLS. So all of these numbers might be skewed just slightly, but your average days on market at 28 is an awesome figure to be a part of. Brownsburg being our next West Side Roundup area market. Active homes, 48, almost identical to what we're seeing in Avon. Average rents are a little bit lower than what we're seeing in Avon, but we're at $1,900 a month, which is down just 1.75%. Average days on market at 31, again up from month over month and year over year, but at a lovely number to be at. Last market to be a part of here on the West Side Roundup. Active homes in Plainfield is going to be at 58. Average rents, again, a little bit lower than what we're seeing in Brownsburg and Avon, and we're down 3% month over month. We're at 1755, and the average days on market at 19. Wow, that is stunning. Average days on market at 19, which is down 32% month over month. Average sales price, and I'm going to backtrack through some of these because I want to see how comparative these are for market to market here on the west side. So at Plainfield, you're seeing 318, 536. Brownsburg at 321, 732. And Avon ticking up just a little bit higher at 329. That all those numbers will show you how closely related every single one of these suburbs are, and great school systems, low vacancy, low turnover costs is what you will typically see in the west side markets. Mike, anything you want to add to any of these?
I find it interesting how little homes are on the market. I think we talked about this before, but between Avon, Brownsburg, and Plainfield, there's roughly 140, 150 homes on the market. We just saw 150 in Anderson. So I think it's an underserved market in terms of number of rentals. And I think we see that reflect in the days on the market, in the teens and 20s, even in November. So I think it's a little bit of an underserved kind of part of town in terms of rentals.
Yeah, I think you're absolutely right. All right, that wraps up our West Side Roundup. Let's get into the next market report of Whitestown. Mike, this is all you.
Whitestown, for those of you who don't know, is kind of on the west side, but it's north. We were just talking about the other west side, not the other west side, but Avon, Brownsburg, and Plainfield. That is like west-west, kind of out by the airport-ish. This is kind of northwest on 65 as you head towards Chicago. And this whole corridor is totally blowing up. And again, this is maybe a little bit of an underserved market here. Only 34 homes on the market. The trend line is kind of above last year for the most part. We are seeing a little bit of a dip from last month. I guess I'm going to chuck that up to seasonality, but average rent there is $21.50. Days on the market, a little high, but I guess acceptable for November. 48 days on the market. Sales price $372. That please disregard that graphic there. It is not down 25% from last year or last month. That would be a shocking number. That is a typo. It's actually up just slightly 0.5%, something like a 0.5%, and then up about 3.5% from last year. So the sales price is trending up. It is not, the sky is not falling as far in terms of the average sales price.
Yeah. In case you're wondering what that looks like in numeric. So last month we were at 371 and this month we're at 372. So yes, like Mike said, we are up just under, or just over rather, 0.5%.
Yeah. So this is, and we'll talk about Lebanon here, but it's going to play into this. There's so much growth out there. That whole 65 corridor. Actually, one of the things I was going to talk about, Chris, was there was this news article about there's only 2 exchanges, like exits off the highway between here and I think Chicago, that have 0 development. And one of them is just outside of Whitestown, just outside of Lebanon. And it's because it doesn't have a lot of access to utilities, but they're saying just because everything is blowing up so much now, even that interchange is getting a lot of interest, and they expect to start developing that. So there's just that whole 65 corridor there's so much activity going on there. And this is the kind of gateway to Indianapolis here, is this Whitestown.
Interesting. Wow, That's interesting. Before we even get to Whitestown, if we're taking that gateway that you just mentioned, the first one that we're going to hit is Lebanon before we even get to Whitestown.
Lebanon. This is our last one, isn't it? I think Lebanon's our last one. Okay, so we've been sounding the alarm bells at Lebanon. We started following this year. In case you're living under a rock, Lebanon is experiencing a tremendous amount of growth, or will be experiencing a tremendous amount of growth. There's billions and billions of dollars between Lilly and Meta. Meta is thinking about putting a plant there. I mean, there's just tons and tons of development going there. So this is going to be a really fun one to watch over the next year, 2, 3, 5 years. This is going to continue to go up. And I mean, you could see, look at the average rent, $17.99. I mean, that is not a typo. That is up 80% from last year, and up. We're still seeing it go up 5% from last month. So it is just the sky is kind of the limit here. The active homes is, if you watched last month, we kind of did a deep dive on why that is at 140. There's a big asterisk there. And that is the vast majority of those are going to be multifamily, like a huge 1 or 2 big multifamily apartment complexes hit the market. Must have been last month or about 2 months ago. And that really affected the number of active homes. So it's 140, but not really, kind of a thing. If you're looking at single family homes. So I would encourage you to go on to Zillow or give us a call and make sure you take a look at the number of single family homes or the type of home that you are looking to purchase or own to make sure that you're comparing apples to apples. But I mean,
Exactly.
it reflects in the average days on the market, 28 days on the market. That is great in November. So that is just amazing news. Average sales price still really, really affordable at $295. That is up 6% from last year and 17% from last month. Is that right? Can that be
I
right?
know. Well, yeah. I mean, it is based on the numbers. I mean, last month we were at 251. This month we're at 295. So my percentages, my conversions there are not amazing, but that seems pretty close.
Yeah, I'll tell you, I'm looking at the kind of the historical. Last month was a little bit of a weird month in terms of like the month before that was 315. It was a little all over the map. I would want to do a deep dive on that, but that seems a little bit askew. I wouldn't be thinking the sky is falling or that we're like have that big of a up and down. You know, I think
Yeah.
it's some weird numbers.
Yeah, exactly. It is going to be weird numbers because of what's happening in Lebanon. You have a home that sells for $1 million, and you have a home that sells for 200,000. It's going to skew these numbers considerably because although active homes on the market is 140, Lebanon is not quite that big of a market yet.
Yeah.
So the biggest thing I'm taking away from this market report specifically, other than all the economic data that we continue to relay on a month-to-month basis, which you better be in tune to, because this is more than an emerging market. This is on the tip of emerged. I mean, there's so much happening in Lebanon. Your average rents is what I'm looking at here at $17.99, which is up 81% year over year, and I believe that's as accurate as it gets, and that's what I'm taking away from this market report. This is a stunning market for us to include in these market reports, and I can't wait to see what happens in these going forward.
Can we dub this the new Westfield? Can we do that?
Oh, see, this is where you and I are going to get into an argument again. I don't know, new Fishers to me. Although, no, I'd say you're probably right. This is going to be your new Westfield for sure. Yeah, because I mean, Westfield still has a tremendous amount of growth potential. I think Fishers, and correct me if I'm wrong, this is my take on Fishers, is it's kind of bursting at the seams. I mean, it's already developed. Fishers is developed. Now it's upward development, right?
Yeah.
It's just improvement, I think, in the Fishers area, where Westfield is still expanding. Yeah, so I would say Lebanon is kind of more of a Westfield comparison. It's a little bit smaller and has nothing but room to grow.
Yeah. Totally agree. I just see a little bit more room to run on the average rents in Lebanon versus Westfield and Fishers.
Completely agree. Absolutely. That'll be really a fun number to watch. Yeah. All right, that's going to wrap up our market reports here for November of 2024. Again, we're going to shake things up a little bit as we get into 2025. We have, of course, all of our interviews that are dropping every month, all of the fun little clips and snippets and tips that you're going to get from those that are dropping on all of our social media platforms, which, of course, is going to include your Facebook, your Instagram. We're even on TikTok, and you believe it or not, you're not going to see me doing any fun dances on there, but you will see some of our market reports dropping there. And, of course, if you're not into the social media channels, you've got to check us out on our website. Go over to that Watch and Learn, drop it down, and you can watch all of this fun information that's going to help you make informed decisions in an ever-changing real estate market here in the Indianapolis area. So be sure to stay tuned. Jump into the comments, jump into the chats. Let us know what information you want to make sure that we're relaying to you on a month-to-month basis. That's going to do it for us. I appreciate you guys tuning in. Be sure to like and subscribe. We'll check you guys out in the next video.
See ya.